In the United States, when April 15th arrives, the average investor feels pain. They look at their tax bill and they see a loss. They see money that was theirs, now taken away by a force they do not trust to fund a system they do not believe in. It is viewed as a penalty for success, a fine for being productive. But if you fly across the Atlantic to the cold, quiet offices of Stockholm, you will find a different perspective. The Swedish investor does not view tax as a penalty. They view it as a purchase. They are not charitable. They are not naive. They are simply buying an asset that you cannot find on the New York Stock Exchange. And because they buy this asset, they do not worry about the things that keep you awake at night. They do not worry about social unrest. They do not worry about the collapse of their healthcare system. They do not worry about the safety of their children in public schools. We are taught that wealth is a game of maximization. How do I keep the most money? How do I pay the least to the government? But there is a hidden variable in that equation. It is the cost of fear. When you pay zero for the stability of your society, you must pay everything for your own private protection. You build walls. You buy guns. You move to gated communities. You are rich, but you are not free. Today, we are going to look at the Swedish wealth tax mindset. We are not talking about politics. We are talking about risk management. We are going to analyze why the smartest money in the world is willing to pay a premium to insure against chaos. We will see why true wealth is not just about the number in your bank account, but about the stability of the world outside your window. If you are ready to view your portfolio through the lens of longevity rather than speed, consider subscribing to the channel. Let us begin. Imagine the ultimate goal of the modern American investor. You make millions. You move to a beautiful home. But look closely at that home. It is likely in a neighborhood separated from the rest of the city. Perhaps there is a gate. Perhaps there is a guard. You send your children to a private school because the public one is failing. You drive a large car because the subway is unsafe. You buy gold and guns because you fear what might happen when the economy turns. Every step of your life requires a private transaction to replace a public failure. You are essentially building a tiny private civilization for yourself and your family. And this is expensive. It is inefficient. But more importantly, it is fragile. In finance, we call this redundant infrastructure. Imagine if every house on a street decided to build its own power plant and its own water treatment facility because they did not trust the main grid. That is what low-tax societies look like to a Nordic observer. You save money on the tax bill, but you bleed money on the lifestyle. You are paying for the failures of the system around you. You are paying to insulate yourself from the reality of your own country. Now, look at the Swedish model. The tax rate is high. There is no denying that. A significant portion of income leaves the paycheck before it ever hits the bank account. But what returns to the investor? In Sweden, the billionaire walks the same streets as the school teacher. They likely send their children to the same school. They do not need a private guard. They do not need a gated community. The entire country functions as the gated community. The high tax is simply the membership fee for a society that actually works. This is the gated community paradox. By trying to keep all your money, you end up living in a fortress. By giving up a portion of your money, you end up living in a garden. The Stoic investor asks a simple question. What is the cost of my anxiety? What is the price of always looking over my shoulder? In a society with extreme inequality, the rich must constantly hide. They must constantly protect. This mental energy is a liability. It drains focus. It drains joy. It creates a low-level hum of stress that never truly goes away. When a Swedish investor pays their taxes, they are effectively outsourcing their security to the state. They are paying for a baseline of social health that ensures no one is desperate enough to rob them. It is a pragmatic calculation. If your neighbor is hungry, your pantry is not safe. If your neighbor is sick, your health is at risk. If your neighbor is uneducated, your business cannot hire them. The American mindset says, I will take care of myself. The Nordic mindset says it is cheaper and safer if we take care of the baseline together. This is not about morality. Do not mistake this for kindness. This is cold, hard economics. The cost of protecting a fortune in a collapsing society is infinite. The cost of maintaining a stable society is merely a percentage. When you view it this way, the tax bill transforms. It is no longer theft. It is the premium on a comprehensive insurance policy against chaos. And for the person who wants to hold wealth for decades, not just years, that is the most valuable insurance policy money can buy. In the language of Wall Street, we obsess over volatility. We look at charts, we measure the VIX, we panic when the line moves down by 10%. But there is a deeper, more dangerous form of volatility that most technical indicators ignore. It is the volatility of the social fabric itself. History is a brutal teacher. If you look back over 500 years of economic data, you find a recurring pattern. When the gap between the ultra-rich and the working class becomes too wide, the system breaks. It does not bend, it breaks. Sometimes it breaks through inflation, sometimes it breaks through populist politics. And in the worst cases, it breaks through revolution. For the wealthy individual, this is the ultimate tail risk. It is the black swan event that wipes out not just a year of gains, but a lifetime of accumulation. You can have the best portfolio allocation in the world, but if the currency collapses or the laws change overnight because of political rage, your asset allocation does not matter. The Swedish investor understands this. They look at inequality not as a moral issue, but as a volatility index. When inequality gets too high, the risk of the system crashing increases. Therefore, they are willing to pay to lower that risk. Think of it as Riot Insurance. It is a cold calculation. By transferring a portion of wealth back into the system through high taxes, they keep the social temperature cool. They ensure that the average citizen feels invested in the status quo rather than crushed by it. When the average person has healthcare, education, and a safety net, they have no reason to burn the system down. They become stability. This is the trade-off that is hard for the American mind to accept. We are trained to want 100% of the upside. We want the biggest piece of the pie possible. But the Nordic mindset asks, what is the value of owning 100% of a pie that is sitting on a burning table? It is far more rational to own 50% of a pie that is sitting on a stable table. A table that will still be standing in 20 years. A table where you can sit and eat in peace. When you look at the United States, you see incredible innovation, yes, but you also see incredible fragility. You see a political system that swings violently. You see cities that struggle to function. You see a population that is angry. This is risk. It is invisible on the balance sheet today, but it accumulates like debt. And eventually, debt must be paid. The wealthy in Sweden have decided to pay the debt annually in small installments called taxes, rather than waiting for the balloon payment of a crisis. They sacrifice the short-term maximum for the long-term guarantee. They are not trying to get rich quick. They are trying to stay rich forever. And the only way to stay rich forever is to ensure the society around you survives. There is a myth that the investor stands alone. We like to believe that we build our portfolios in a vacuum, relying only on our own intellect and capital. But this is an illusion. Your wealth is entirely dependent on the competence of the people around you. If you own a business, you need employees who can solve problems. If you own stocks, those companies need consumers who have money to spend. If you own real estate, you need tenants who are stable. In many parts of the world, human capital is treated as an expense. It is something to be minimized. But in the Nordic model, human capital is treated as an infrastructure project. Just as you build roads to move goods, you build people to move ideas. When a Swedish investor pays their taxes, they are funding free university education for the entire population. To the American eye, this looks like charity. To the Swedish capitalist, this looks like a supply chain strategy. They are ensuring a steady supply of highly skilled engineers, designers, and managers who do not carry the crushing weight of student debt. A worker without debt is a worker who can take risks. A worker who is educated is a worker who creates value. Consider the alternative. In a low-tax system, you might save money on the front end, but then you struggle to find qualified talent. You pay premiums for health insurance because your workforce is sick. You lose productivity because your employees are stressed about medical bills. You are saving pennies on tax, but losing dollars on efficiency. The Swedish model acknowledges a simple truth. You cannot build a first-class economy with second-class citizens. By paying into the system, the wealthy are essentially prepaying for a high-performance environment. They are buying a workforce that speaks perfect English, understands complex technology, and remains healthy enough to work until retirement. This makes Swedish companies incredibly competitive on the global stage. It is no accident that a small, frozen country in the north has produced so many global unicorns per capita. It is the return on investment of their tax dollars. So, the next time you look at a tax bill, ask yourself what you are getting in return. If the answer is nothing, then you have a right to be angry. But if the answer is a healthy, educated, and productive civilization that fuels your investments, then perhaps the price is fair. There is a distinct sound to American wealth. It is loud. It roars from the exhaust pipes of supercars. It glitters from diamond watches. It shouts from social media feeds. In a culture of low taxes and high individuality, wealth is meant to be seen. It is a scoreboard that must be displayed. But in the Nordics, wealth has a different quality. It is silent. This silence is not accidental. It is engineered by both culture and the tax code. There is a concept here known as the law of Jante. It is an unwritten rule that says, you are not to think you are anyone special. You are not to think you are better than us. To an outsider, this sounds oppressive. It sounds like mediocrity. But to the wealthy insider, it is the ultimate camouflage. The tax system enforces this humility. It makes the accumulation of absurd, flashy material goods much more difficult. But in doing so, it grants the wealthy a rare and valuable asset: privacy. In a highly unequal society, the rich must constantly signal their status to prove their worth, yet simultaneously hide their physical location to ensure their safety. It is a paradox. They want to be seen, but they fear being watched. In Sweden, the high tax rate flattens the visual hierarchy. Because the gap between the CEO and the engineer is smaller, the tension is lower. You can possess a fortune, yet walk into a coffee shop in Stockholm without a single head turning. You can ride a bicycle to work without being judged. You can live a normal life while possessing abnormal capital. This is the silence of wealth. It is the ability to enjoy your life without becoming a target. When you display wealth aggressively, you attract envy. You attract scams. You attract lawsuits. You attract distant relatives asking for loans. Loud wealth carries a high cognitive tax. You must constantly manage the reactions of others. Quiet wealth is efficient. It requires zero maintenance. The Swedish system allows you to be rich without the burden of being famous for it. You pay a financial tax to the state, yes, but you avoid the social tax of envy. For the person who values freedom over fame, this trade is a bargain. It turns out that the most luxurious thing money can buy is not a golden car, but the ability to walk down the street like an ordinary person with total peace of mind. Let us close the ledger and look at the final balance. The Swedish model is not perfect. It is expensive. It requires a level of trust that is difficult to find in the modern world. But for the investor who looks at reality with cold eyes, it offers a product that the free market often fails to deliver. It offers a society where the baseline is high enough that desperation does not exist. It offers a world where you do not need to fear your neighbor. It offers a life where your wealth is not a target on your back, but a quiet engine in the background. The choice comes down to this. Do you want to be a king in a fortress, constantly repairing the walls and paying the guards? Or would you rather be a citizen in a garden, where the gates are open because there is no one outside trying to break in? The American dream is to escape the system. The Nordic dream is to build a system so strong that you never need to escape. True wealth is not just the ability to buy whatever you want. True wealth is the ability to sleep at night without locking the bedroom door. That is the asset the Swedes have purchased. And perhaps it is the only asset that truly matters when the winter comes. If you are ready to build wealth that lasts through the seasons, and if you value stability over noise, subscribe to Mindset for Wealth. We will see you in the next video.